For Your Money is brought to you by NelsonCorp Wealth Management.
It's now time for Your Money. We're joined by David Nelson, CEO of NelsonCorp Wealth Management. Welcome back, David.
Thank you very much. I appreciate it.
So the stock market has continued its march higher this year, but not all areas of the market are created equal. Where are you seeing the biggest divergences?
Well, kind of hard to see this year as far as pretty much everything in the stock arena has done well. But if we were to drill down, and I brought along the chart to illustrate as far as for folks, the importance of the understanding the differences. So the blue line is illustrating as far as the U.S. stock market represented by the S&P 500. And as you can see, it's had a really nice year. It's up 23%. The red line is looking at something totally different. That's the MSCI World Index X the U.S., meaning the U.S. has pulled out of this, and what we see here is coming through, give or take mid-year, somewhere around May and June, they were quite close, maybe 1% or 2% difference as far as between the two of them. But if we look at the red line and see where it is today, it's basically back where it was in May. And that's, again, the all-cap world index, X the U.S. We pulled the U.S. out of that. The blue line is, again, illustrating just the U.S. stocks. So big difference as far as between the two for this year. And again, a very important point as far as to make as far as with individuals that there is a difference. And again, it's very obvious as far as in the second half of this year.
So tell us, what could be some of the drivers of this differential?
Primarily two big things. The first of which is size. So large, really large companies have done really well this year. And then we drill down to the sector level, which is a way of saying healthcare, consumer staples, technology, whatever. Technology's been another, again, a big winner as far as this year. So if we look at it in the United States, we now have 6 companies that are over $1 trillion in market cap, which is just astounding. 3 of which are actually over $2 trillion. Now, if we look globally, what we find is none that are just strictly a shareholder owned. You have quasi companies that have some ownership interest by governments, like China, for an example. And so those particular parts of the world haven't done nearly as well. Emerging markets as a whole has struggled this year. China in particular has really struggled. We're talking about down 20%. And then the last variable, which I know I talk a lot about as far as on this segment, is the dollar. The dollar is very crucial as far as in trying to come up with a correct answer as far as in this arena. What should I be leaning towards or leaning away from? And the dollar is a big variable as far as in that decision.
David, as always, thanks for your insight.